I'm James Turk. I'm a director of the Gold Money Foundation. It's my pleasure to be here today with Ronald-Peter Stöferle of Erste Bank and the author of In Gold We Trust, which came out in early July and I think took the entire globe by a whirlwind in terms of the popularity at that point it was received. Tell me a little bit about the background of that particular report and why you put it together.
Hi James, thanks for having me again.
Yeah.
Well, it's my 5th report on gold, and I think I hope it was the best, and I think from a timing perspective, it's also been pretty good. We issued it beginning of July, and then the gold price seriously started taking off, and then we had this kind of parabolic move in August. And I think what was really interesting was that I covered some of the topics that are only rarely analyzed in the gold business. For example, the stock-to-flow ratio, which is from my point of view really essential to understand gold. And I've also been writing about the monetary aspect of gold in length, as you wouldn't expect it normally from a banking institution. And yeah, I'm kind of nervous about the next gold report because I don't know what to write anymore, but I think it's, yeah.
The stock-to-flow ratio is something that I follow very closely, and just to put that into context, because people may not be familiar with that or haven't read your report, but it's the above-ground stock of gold and how that above-ground stock is added every year by new mining production, which is approximately 1 3/4% per annum, fairly consistently over a long period of time. And the conclusion is basically that what's important is the gold that already exists, not necessarily what's added to that above ground stock at any moment in time. The logic being that gold mined by the Romans 2,000 years ago is identical to gold mined yesterday in Nevada.
Exactly. And I think that's what many gold analysts or analysts at all don't really get, because I often read that, okay, gold price can't really fall because the mine supply is more or less flat and so on. But I mean, if mine supply would increase by 10%, it wouldn't be for the total stock of gold, that wouldn't have a big impact. And the total gold supply grows by, I think, 1.5 or 1.6% every year, almost like the population growth. And,
right.
And I think this kind of guarantees trust that there's not going to be a very inflationary movement for the price of gold. And I think this kind of trust is what everybody's kind of losing now in fiat currencies.
Yeah, understood. So money, like every other economic good and service, is a function of supply and demand. The supply of gold remains relatively constant. What changes is the demand for gold. And the demand for gold can change up or down depending on people's confidence in the monetary system, the price of gold. Somebody who is a holder at $1,800 an ounce might be a seller at $2,200 an ounce. And conversely, somebody who owns no gold at $1,800 might be a buyer at $2,200. So it's a demand factor that's more important ultimately than the supply, because the supply is relatively constant.
Absolutely, and I think this also kind of smoothed the uptrend. And on the other hand, this factor is kind of crucial because, for example, in copper or in oil, both commodities and if there are supply disruptions or if there's a huge oil finding, for example, that has got a much bigger impact than on gold. And I think this is perhaps the very central point that I honestly got like 2 or 3 years ago, and then I started to realize how important this stock-to-flow ratio is, and that's why I covered it in my last report.
Yeah, to me it's essential to the whole idea behind bullion as a form of money. And the way I explain it is that gold is not even, in my view, a commodity. It's a tangible asset, but it's money. And the reason why it's money and different from commodities like crude oil are produced, consumed, and disappear, and have a very small above ground stock, which is why the stock to flow of a commodity is very significant because production can change the above ground stock relatively quickly in a short period of time. But gold, on the other hand, because it has this huge above ground stock and it's the only asset we produce for accumulation and does not disappear, we hold it for a different reason. It's not because it can be consumed or produce wealth like other things do, but because it's money and useful for economic calculation. So to me, that's the whole essence of, gold is money.
Absolutely.
Is your report still available from the Erste Bank website?
Absolutely, sure.
And I think it is also published by GATA, so it could probably be downloaded by the GATA.org
GATA
website.
webpage. Just Google in Gold We Trust 2011 and
Yeah.
there's Zero Hedge and on German Goldseiten.de.
I'm sure it's all over the place.
Absolutely.
Was it in German as well?
German and in English.
In English. Any other languages or just those two?
Hopefully Chinese next year.
Oh, okay.
That would make sense.
Yeah, definitely would, given the interest that the Chinese have in gold. Talking about GATA, we were both at the GATA conference in London. What were your impressions of that conference?
It was really, really special, and I think it was by far the best conference that I've ever attended. Not only the speakers, but also the guests. There were I think 400 guests from 38 different countries. I've met really bright, intelligent and fun people, and I think we all had a great time. And especially, I'm reading and writing about gold quite a lot, so there's not too much new anymore. But at this conference I heard, there was Jim Rickards, there was Andrew Maguire, it was really interesting presentation. There was Jim Sinclair, and I'm really looking forward to the next GATA conference.
Yeah, I don't know if they've announced anything yet, but I would encourage them to do it. Like you in terms of your reporting, getting information about the gold market out there, that's what GATA has been doing. They've been doing a very good job at it, in my view. Let's talk a little bit about the gold market. And we've just gone through a bit of a correction here the last couple of weeks. What are your thoughts?
I think it's just a normal and healthy correction. I've just seen that open interest decreased to a 2-year low, so it's been kind of a washout. And if it's just been the margin hike, they hiked it for I think roughly 20% in gold, silver, and in copper. I think it's not really useful to look for the reasons for this correction. I think it's the fact that I got so many calls on Monday from journalists and from investors, and they were all kind of asking, is this the end of the bull market? Did the bubble already burst? The fact that the negative turned that bearish so fast, that makes me kind of confident that there's not too much euphoria priced into the gold price. And I think we're right now we're like 15 or 16% below the all-time high. If you compare it to most of the stock indices, for example, I think gold is still up by 22% this year in euro terms, and also more or less in US dollar terms. The German DAX is in the reds by I think 25%, something like that. So it's been great performance on a relative but also on an absolute basis. And as I've said, I think that the sentiment turned a bit too bullish especially in August. We had this we've had in many tabloid newspapers, for example, we had gold on the cover of those newspapers and magazines. So that made me kind of cautious. And there was also like many big banks like JP Morgan predicted gold to rise to $2,500 by the end of the year. So that made me kind of cautious, and right now I think we will consolidate within the next few weeks. Normally October has a not really horrible, but not a very good seasonality. And I think in the next few weeks the volatility should decrease in terms of a normal correction, and then we'll make another leg up.
Yeah, markets at the end of the day are always driven by fundamental factors and fundamental reasons. Has there been any fundamental change from the beginning of August to now that would cause you to suspect that this bull market in gold, which is now 10, 11 years old, that it's changing or ending?
I don't know. Did real interest rates turn extremely positive? I don't think so. Did our structural problems within the economy and over-indebtedness?
Last time I checked, the sovereign debt crisis hasn't been solved, has it?
No. I didn't read the newspapers this morning, but I don't think so.
Is there anything in your mind that could suggest that fundamentally, gold has changed now from what it was 2 months ago?
I mean, the price did change, absolutely, and that's what we said at the beginning. If you're like a swing trader, you're just selling at 1900, and which is perfectly okay. Yeah. But from an investment perspective, I think that's the perfect environment for like constant accumulation. I just looked up the demand numbers coming from China and from India, and what we shouldn't forget, and this is what Frank Holmes, for example, calls the love trade and the fear trade. I don't think that gold is a investment or an asset class for pessimists. It's also for optimists, and 60 or 62% from total demand coming from Asia, from China, and from India especially. And with their growing prosperity and their deep affinity towards gold, I think the general uptrend in demand coming from China and India will continue.
Meaning that there's increasing recognition that gold is a form of liquidity, that it's a form of money?
Absolutely, and what's really interesting from the kind of phases of this bull market is, I think when I talk to our clients or the media, like a few years ago, the perception was always that gold is a commodity, and right now I think people are more and more getting the monetary aspect of gold, and they're understanding why gold is money for so many hundreds, so many thousands of years, that gold cannot be debased, that it can't be printed, and I think this is one of the factors that is going to be kind of the next stage of this bull market.
Yeah, that's a point that I like to make as well. The factors that made gold as money in the first place, they haven't been lost or they haven't disappeared. They've just been ignored or forgotten the past few decades as we've had this experiment with fiat currency going on. And as we see this experiment with fiat currency going badly, people are looking for alternatives, and they're rediscovering those attributes that gold has. Number one of which is that it's money with no counterparty risk. Because it's a tangible asset, it's not based on someone's promise. It's based on the value of the asset and how the market perceives that asset. And given a 5,000-year history, I guess one would have to assume that for the foreseeable future anyway, gold is going to continue to do what it's done for these past 5,000 years, continue to be accumulated because it's money with no counterparty risk. I guess you see it the same way as well.
Absolutely.
Yeah.
And stock to flow ratio is one factor, and I think this loss of trust in the euro, but also in the US dollar, but also in our political system. I think this the trend is kind of picking up momentum right now, and as you know, in every trend at the very end is this parabolic move, and I think that we also gonna see for the loss of trust. So there's gonna be one day when people will wake up and they're gonna realize, okay, our fiat currencies are backed by nothing. It's only a promise, and then they're gonna realize that there's a real alternative with a 5,000-year-long history.
Yeah.
And I mean, being bullish on gold also means kind of being bearish on our like political and financial future, and I think that's a real big concern right now.
Mm-hmm. Are you seeing a demand here in Vienna for physical metal picking up as a consequence of this recent fall in price?
Yeah, on last Friday and on Monday I called some physical traders and I talked to our guys dealing with physical gold in the bank, and they said they had huge demand. So I think there's a growing, how should I say, difference between the paper gold market and the physical market, and it makes me confident that people kind of use this correction to buy into physical gold, but because this also means that they were kind of waiting on the sidelines, which is smart, and they didn't want to buy into this sharp up move, and that's also a good sign for this long-term trend. And when I'm talking to journalists, one of the first questions always is gold in a bubble, and that's on the other hand also a very good contrary indicator, because when media and most of the analysts think that it's already a bubble, then I'm pretty sure that it isn't a bubble.
Yeah, I agree. We're still early days, I think. Yeah, I wanted to ask you, there's a lot of talk going around on the internet about the change in the law or practices here in Austria with regard to the purchase of physical metal. Can you explain what's going on? Is there a limitation that's been placed on what individuals can purchase now across the counter?
Now that this kind of legislation is there forever, so you basically just, if you want to buy more gold than like 15,000 euros, then you have to show your ID, your passport or driver's license. But as I said, this is around for many years, and I got many emails from all over the world that is like asking, is this the first step to confiscating gold, and it's, I think, I mean, it isn't, and as I've said, the fact that people are getting nervous about those things so fast also shows that many people expect that there's going to be some gold confiscation. As Jim Rickards, for example, said in London, he expects like a windfall tax on profits on gold by like 80 or 90%. Mm-hmm. And when I just did a speech in Munich, I got 2 questions about this confiscation theme after the presentation, and that's also a topic that was never asked before.
Yeah, well, I mean, that's a topic very much in the United States because gold was confiscated, there. And gold's been confiscated in Europe by Lenin and by Hitler. So the fact that, gold has been confiscated in different places around the world, I guess, people are concerned about protecting their wealth, and therefore it seems logical that confiscation would be, on their minds. But with regard to purchases here in Vienna, that's a misinterpretation then, or Austria really, not just Vienna. It's a misinterpretation that those rules have already been in place for quite some time.
Absolutely.
So basically that's geared toward, I guess, money laundering. Is that the issue? Or?
Yeah, and it's not only for gold purchases. It's also the same if you want to
open a brokerage account.
Exactly. Yeah. So that's just normal.
Good. This is going to be viewed by thousands of people around the world, like
Hopefully.
Your last video, which we did a few months ago, which was very popular. Are there any final thoughts or comments that you would like to share with the viewers of this video?
Well, I think I'm really confident on gold mining equities. I think they're it's just a great buying opportunity. For
Their time has finally come.
Hopefully, but I've thought like this a few times before, honestly. But if you want to have some leverage on the price of gold, you have to go for gold mining equities, and if you want to have huge leverage, you buy the juniors. But I always recommend buying gold mining equities and physical gold, and I think that gold mining equities are by far the cheapest and most interesting sectors in equities in general. But as we've seen in August, for example, the decoupling didn't really work out, and I'm not extremely confident or extremely bullish on the general stock markets. So therefore, perhaps the decoupling won't happen within the next few months. But you know, there's going to be dividend yields of roughly 2 or 3% for the big mining stocks, and that makes them also much more interesting for the big equity funds. So gold mining equities, I think it's a long-term buy, really great buying opportunity. And on the other hand, I think that as we've seen from the decision from the Federal Reserve, they're going to keep the interest rates at almost zero till mid-2030. So I absolutely expect real interest rates to stay negative, not just in the US, but also in Europe, and especially in Asia and in China. And that's just a perfect environment for gold. And I don't see too many alternatives to buying gold and silver.
One last question. What about gold's little brother, silver? Any thoughts on that?
Yeah, we're in the process of launching a silver mining basket, and I've made the research on those companies, and they're also a great buying opportunity from my point of view. There are 10 Canadian silver mining stocks in this basket, and I'm also kind of working on a report on silver. But as you know, my reports are always pretty long. So the last gold report was like 92 pages, because I'm saying like, okay, if I want to analyze something, then I'll do it very thoroughly. So I want to analyze the fundamental and the technical perspective. So I think it's going to take a few more weeks for my silver report.
Maybe first quarter of 2012 or before then?
Hopefully.
First quarter of 2012, we'll look for that. Ronald Stöferle, Erste Bank, thank you very much for being with me this morning.
Thank you, James.
Thank you.
Thank you very much.